morning, ladies and gentlemen. My name is Russell Higgins, and I'm the Chairman of Argo Investments Limited. On behalf of the Board of Directors, I'm pleased to welcome you to the 75th Annual General Meeting of the company and to report on its operations and financial results for the year ended 30 June 2021. As you are aware, this year's meeting is again being conducted virtually as we comply with the prevailing COVID-19 health advice and restrictions. I regret that we're unable to meet with shareholders today in Adelaide, and I'm hopeful that shareholders will be able to attend next year's AGM in person. As we webcast this meeting live via the Lumi platform, shareholders and proxy holders have the ability to ask questions and submit votes. We assure you that every effort has been made to ensure that the meeting runs smoothly and without technology issues. If you do experience technology difficulties, a recording of the meeting is also available on our website later. Questions can be submitted at any time, and I will address the questions for each relevant agenda item. To ask a question in writing, please select the messaging tab at the top of the Lumi platform. Within that tab, there is an Ask Question section for you to type in your question. Please state the agenda item to which the question relates. Once you've finished typing, please hit the arrow symbol to send. I request that you keep your questions short so that as many shareholders as possible have the opportunity to ask a question. Our Company Secretary, Tim Binks, will moderate the question facility and may combine similar questions for efficiency. Joe Chipperfield, our Legal Officer, will read out the written questions along with the shareholder's name. For shareholders who wish to ask a verbal question, an audio question facility is available during the meeting. To use this service, please dial the number shown on the main Lumi platform information page. Enter the meeting ID followed by the hash key. You will be asked for a participant PIN. However, simply press hash again to join the call. To ask a question, press *9 to signal the moderator. Once your question is answered, your line will be muted. We will answer online questions first, followed by any telephone questions. I'll now begin the formalities. I have been informed by the Company Secretary that the meeting has been convened in accordance with the temporary modifications of the Corporations Act and the company's constitution. A quorum is present, and therefore I declare the meeting open. A disclaimer is displayed on the screen, and it is important to understand that the information to be presented today is general information only and is not a securities recommendation or statement of opinion intended to influence any person in making an investment decision. You should all consider seeking independent professional advice before making any investment decision. I'm pleased to introduce my fellow non-executive directors, our Managing Director and our Company Secretary. Anne Brennan. Anne was appointed to the board in 2011. She has a diverse background in chartered accounting and senior corporate management roles. Anne is Chair of the Audit and Risk Committee.
Good morning, ladies and gentlemen.
Chris Caffeo. Chris was appointed to the board in 2016. He is a well-known figure in the financial services and philanthropic sectors, following a successful executive career in funds management. He is a member of the Audit and Risk Committee.
Good morning, ladies and gentlemen.
Roger Davis. Roger joined the board in 2012. He is a Rhodes Scholar with an extensive background in banking, both in Australia and overseas. He is chair of the Remuneration Committee.
Good morning, ladies and gentlemen.
Liz Lewin. Liz was appointed to the board in 2018. She has extensive experience in the investment management and superannuation industries, both within Australia and internationally. She is a member of the Remuneration Committee.
Good morning, ladies and gentlemen.
Liz is standing for re-election today, and so we'll hear more from her later on. Joycelyn Morton. Joycelyn was appointed to the board in 2012 and is highly qualified in financial matters, following an international career specialising in accounting and tax. She is a member of the Audit and Risk Committee.
Morning, ladies and gentlemen.
Joycelyn is also standing for re-election today, so we'll hear more from her later on. Jason Beddoe, our Managing Director. Jason joined Argo in 2001, initially as an investment analyst. He became Chief Investment Officer in 2008, Chief Executive Officer in 2010, and joined the board as Managing Director in 2014. He has an engineering degree and prior to joining Argo, worked in the stockbroking and mining industries.
Good morning, everyone.
Jason will deliver his Managing Director's address later in the meeting. Tim Binks, our Chief Operating Officer. Tim joined Argo in 2007 and has been Company Secretary since 2010 and Chief Operating Officer since 2015. He has experience in chartered accounting, funds management and stockbroking, overseas and in Australia.
Good morning, everyone.
We will now move on to the meeting procedures. All resolutions at this AGM will be decided by poll, and I will shortly open the polls for all items of business. Once the polls are open, if you are eligible to vote at this meeting, a voting tab will appear at the top of your screen. Selecting this tab will bring up the list of resolutions and present you with voting options. To cast your vote, simply select one of the options. There is no need to hit submit or enter button as the vote is automatically recorded. If you have the ability to change, you do have the ability to change your vote up until the time I declare the polls closed at the end of the meeting. I now declare the polls open. The final results of the polls will be released in an ASX announcement later in the day. I report that the minutes of last year's annual general meeting were confirmed as a correct record at the subsequent meeting of directors. The notice of meeting for this year's AGM has been circulated to shareholders and I propose to take it as read. We will now move to the first item of business. Item 1 on the agenda concerns consideration of the annual financial statements and reports. The audited financial statements of the company and the reports of directors and the auditor for the year ended 30 June 2021 have been published and made available to shareholders. In the course of receiving and considering the financial reports, I will now make some general comments about the year under review. This will be followed by an address from our Managing Director, Jason Beddoe. past year has been a difficult one for many of our shareholders, with COVID-19 related restrictions on travel, both international and interstate, lockdowns, and various other restrictions creating a range of impacts, including on work, social, recreational, and family activities. Let's hope that with the vaccination rollout progressing, that the next year is a better year for us all. The pandemic has been a difficult year for many businesses as well, impacting those in the travel, hospitality, recreation, and entertainment sectors particularly hard. However, many of the larger ASX-listed companies have been robust and adapted to the challenging conditions fairly well. In Argo Investments' case, we've been able to carry on without our business model or investment philosophy being affected. Our staff are able to work remotely and can continue to meet with companies and analysts online. While COVID-19 certainly provides challenges for our investment team in assessing companies' prospects in the short term, we remain focused on identifying long-term value rather than being overly influenced by short-term or temporary factors. Despite all the difficulties, the share market had a stellar year in 2021. The ASX 200 accumulation index increased by 27.8% during the year. Pleasingly, Argo Investments portfolio outperformed the index, with our NTA increasing by 28.5%, and that's after paying all costs and tax. This performance is particularly commendable, given that Argo paid more tax than normal this year due to the large capital gains realised during the year. One of the benefits of a large, diversified portfolio is that different companies in the portfolio will be affected in different ways when events occur or conditions change. This diversification helps to manage risks and to balance out short-term impacts. We can be true to our long-term investment approach due to the strength and diversity of our portfolio. Sydney Airport provides a great example of the benefit of our investment philosophy. We did not need to sell our holding when its earnings evaporated. In fact, we invested more. Ultimately, this long-term value approach has been vindicated, with Sydney Airport shares rising substantially after receiving several takeover bids recently. Argo's share price also provided a strong return, rising 28.6% to end the financial year at $8.93. Since then, markets continued to climb and Argo shares reached a new record high of $9.85 in August, although both the broader market and Argo's share price have pulled back a little since then. Argo's profit for the 2021 financial year was $174 million. This figure included a one-off non-cash income item of $19.1 million resulting from Woolworths Group demerger of Endeavour Group during the year. Excluding that income, our profit result was 22.4% lower than the prior year. Dividend income received from our portfolio was significantly impacted by the effects of the COVID-19 pandemic, although by the end of the financial year, dividends in most sectors were well on their way to recovery. The major banks, which had cut or reduced dividends sharply at the end of the previous financial year, were able to start to increase payouts again as confidence in the economy grew and the need for bad debt provisioning subsided. In response to the pandemic uncertainty, Argo froze salaries for all staff and directors and reduced its operational expenses by over 9%, including by cutting incentive payments substantially and reducing travel and meeting costs. The board declared a fully franked final dividend of 14 cents per share, the same amount as the interim dividend paid during the year. Annual fully franked dividends therefore totaled 28 cents per share, down 6.7% on the previous year. That reduction was much less than the 22.4% decline in profit, demonstrating Argo's ability to draw on reserves of retained profits and franking credits to provide a relatively reliable stream of income to our shareholders. We did this last year too, when COVID-19 first struck the economy, and our loyal shareholders have appreciated Argo's resilience throughout the crisis. Due to several portfolio sales during the year, crystallising substantial capital gains, the final dividend also included an LIC capital gain component of 8 cents per share, our largest ever. When Argo makes a discounted capital gain by selling a stock in its long-term portfolio, we can pass this tax benefit through to our shareholders as though each shareholder owned and sold the stock themselves. Most individual and self-managed superannuation fund shareholders can claim a tax deduction in relation to these capital gains, in addition to the benefit of franking credits. Argo is only one of a handful of companies able to provide this benefit to its shareholders due to our special tax status as a genuine long-term investor, not a trader. This year, we're proud to mark 75 years of investing on behalf of our shareholders. Over this time, Argo has navigated through various market cycles and weathered many disruptive events by consistently and carefully applying our conservative and long-term approach to investing. To mark the anniversary, we've refreshed Argo's visual identity, including the logo. We've also launched a new website with a range of user-friendly features, including a number of short videos. We've also produced a 75th anniversary booklet outlining Argo's history, including a timeline of events and milestones. The booklet is available on our website in the Our History section under the About Us tab. Some notable milestones and achievements over Argo's 75 years include: the company was founded in 1946 and has paid a dividend every year since. Let me say that again. Founded in 1946 and paid a dividend every year since. Argo was listed on the stock exchange in 1948. The company has only had 3 managing directors, including our current MD, Jason Beddoe, in its 75-year history. Quite remarkable. In 1987, the Australian imputation system was introduced, and Argo's dividend has been franked ever since then. 1996 saw our 50th anniversary. By then, assets had reached 744 million, and we had 25,000 shareholders. In 1999, the dividend reinvestment plan was introduced. In 2015, a separate investment company, Argo Global Listed Infrastructure, ASX code ALI, managed by Argo staff, was floated to provide an easy diversification into global infrastructure for Australian investors. And today, Argo has assets of more than 6.6 billion and over 95,000 shareholders. Investing can be a daunting prospect for retail investors, especially during periods of volatility. And we are humbled to be considered a trusted investment by so many shareholders. This is a mantle we do not take for granted. It is particularly pleasing that there are many families on our register who have passed down Argo shares from generation to generation over decades. Furthermore, over 1 in 3 shareholders continue to build up their holding in Argo Investments via the dividend reinvestment plan. Now a few words about the outlook. The Australian and world economies are performing better now than they were in 2020. We expect that corporate profits will continue to recover, notwithstanding market volatility generated by the reopening challenges, possible inflation, and later the unwinding of stimulus measures. The extraordinary recovery of the stock market over the last 18 months reflects high levels of investor optimism buttressed by fiscal and monetary policy measures. Governments worldwide have deployed massive fiscal stimulus to ameliorate the economic impacts of the health pandemic. This has been accompanied by a sustained period of at or near zero interest rates and large quantitative easing or bond buying programs by central banks. How these extraordinary fiscal and monetary stimulus measures are unwound over the coming period will be a challenging task for governments and central banks. It will require a deft touch and good judgment. In my view, even without any missteps, the pathway out represents a risk in the outlook and could be the source of some volatility in the period ahead. With a strong balance sheet, no debt, and a diversified portfolio of quality companies, Argo remains resilient in this environment. The company is well positioned to capitalise on opportunities arising from short-term market volatility, applying our long-term and patient approach to investing our shareholders' capital. I'd now like to conclude by thanking our Managing Director, Jason Beddoe, and his small but dedicated team for their continued hard work. I commend them for their resilience and flexibility during these difficult times. I'd also like to thank my fellow board members for their valuable contributions to the company throughout what has been another challenging year. And importantly, on behalf of the board, I sincerely thank you, our loyal shareholders. And to our new shareholders, I welcome you to Argo. I now call upon Jason Beddoe to present his Managing Director's address. Jason.
Thank you, Russell. After rising for a record 11 consecutive months and reaching an all-time high, the S&P ASX 200 index finally ended its upward trajectory in September, falling 2.7% for the month. The change in sentiment was driven by any number of concerns, including earnings growth peaking, central bank tapering of stimulus, rising bond yields, inflation fears, the US approaching its debt ceiling, and the state of the Chinese economy. The market's strong run has come despite Australia's 2 biggest economies, New South Wales and Victoria, being in lockdown for many months, from which they are now just emerging. While Australia may have initially lagged in its vaccination program, we can now boast one of the highest vaccination rates in the world. And with first dose numbers still rising, we may well end up being the most vaccinated country in the world. So while companies across many sectors like healthcare, retail, travel and tourism are operating at only partial capacity, we believe that many of the businesses most impacted by COVID lockdowns largely remain outside of the listed environment, in the small and mid-sized private space. At this time of the year following the AGM, we usually travel around the country meeting with our shareholders. We enjoy this interaction and the opportunity to answer questions on many aspects of our portfolio and the market in general. Unfortunately, this year in the current environment, it was not possible. In lieu of this face-to-face interaction, we recently released a video which covered many of the questions we are currently being asked by shareholders, as well as some of our current thoughts on the market. The video provides a more succinct format, separate to the formalities of today's AGM, to discuss these topics. For those shareholders who receive electronic communication, an email was sent with a link to the video, and it's also available on our website for anyone else who is interested. One topic that is worth further mention is the most recent corporate reporting season, which demonstrated strong earnings growth and a robust recovery for most industries. It also highlighted the benefits of strong fiscal stimulus, record low interest rates, a booming housing market, and strong commodity prices. The standout features were strong balance sheets and record dividends. In aggregate, Australian companies delivered a record $38 billion in dividends to shareholders during the reporting season, led by the iron ore miners, BHP, Rio Tinto and Fortescue Metals Group. These three companies alone paid $17 billion in dividends to shareholders. The strength of company earnings and the excellent condition of balance sheets was further demonstrated by the increased number of special dividends and a record number of buybacks announced, totaling in excess of $15 billion. We received a number of special dividends: Eagers Automotive, Milton Corporation, Rio Tinto, South32, Suncorp Group and Telstra. Currently, there are more companies in our portfolio undertaking buybacks than ever before, with many more spread across the market. Commonwealth Bank of Australia and Woolworths Group have just completed large off-market buybacks, while the other companies have elected on-market buybacks. We expect the continued health of company balance sheets, coupled with the low cost of debt, should support more company buybacks over the next 12 months. An extraordinary amount of capital has been allocated to equity markets globally, pushing valuations to record levels. This, combined with optimism of vaccination success, huge amounts of cash looking for returns, and increased levels of confidence, has seen a sharp bounce back in merger and acquisition activity and initial public offerings, two telltale signs of a buoyant equity market. Currently in our portfolio, we have ongoing takeover bids for Sydney Airport, Oil Search and Spark Infrastructure Group, with the takeover of Milton Corporation recently completed. However, it should be remembered that a significant number of takeover bids failed to proceed, with the failed bid for Iris one recent example. The number of new IPOs has reached a feverish high. Many of these are relatively small companies or businesses in the resources sector taking advantage of high commodity prices and the demand for newer commodities. However, there are many others we are assessing as potential new investments. Examples of just some of these, either just taken place or current IPOs, include Judo Bank, APM Human Services, EBR Systems, RAM Essential Services, SG Lottery, and Clarity Pharmaceuticals, but that's just to name a few. So this is a busy time for myself and the investment team, as the process of analysing and assessing new opportunities requires numerous meetings and due diligence. And that's not to mention the process involved to ensure we receive a meaningful allocation from the syndicate bankers. No presentation is currently complete without discussing environmental, social and governance matters, particularly the increased focus on the environment and decarbonisation. Companies are currently spending considerable time engaging with shareholders and other stakeholders regarding their ESG credentials and future strategy. Consideration of ESG factors has always formed an inherent part of our investment process, as they can have a significant impact on a company's long-term value and its return to shareholders. The investment team and myself spends a substantial amount of time researching and analysing these issues, including attending ESG investor days, not to mention the numerous ESG-related AGM resolutions of the companies in our portfolio. We believe it is our responsibility as a shareholder to engage with management of all companies in our portfolio regarding a range of ESG issues, not just environmental. Over the last financial year, we have held hundreds of meetings with company executives and over 50 meetings with company board members regarding these issues. Potential liabilities and future growth implications arising from ESG issues are factored into company forecasts and valuations when possible. Environmental factors we consider include carbon and greenhouse gas emissions and the use of renewable energy. In the lead up to the UN Climate Conference in Glasgow, the decarbonisation thematic continues to gather pace and commitments to net zero emission targets increase. With China, the US and India responsible for over half of current global emissions, to achieve these targets, the world will clearly need to be united. In addition, with government commitment, we believe large corporates who are well-funded, have strong business models and sound balance sheets will also be a necessary part of the solution. To find out more, see Argo's Environmental, Social and Governance Investment Statement, which is available on our website. But despite the ongoing COVID pandemic, the global economy appears strong, with massive fiscal and monetary stimulus still in effect. Domestically, there is reason for optimism, with high vaccination rates and significant financial assistance from both federal and state governments. As the economy reopens, we hope to return to a more normal lifestyle as we're seeing overseas. However, confidence may be tested as stimulus is withdrawn and economic settings respond to the possibility of extended inflation and a return to more normal interest rate settings. So there are still plenty of risks confronting the Australian and global economies. COVID-19 is still with us. Market valuations are high, supply chain and logistics challenges are widespread, and geopolitical risks seem to be increasing. China's economic health, as always, will have an impact on global growth and Australia's commodity demand. With the market at these elevated levels, we do expect some volatility. However, with our diversified portfolio, no debt and cash available, we believe Argo is well positioned in the current environment. I'd also like to acknowledge the efforts of the whole team this year, who again under extraordinary circumstances in both our Adelaide and particularly Sydney office have done a great job to keep Argo fully functional. So thanks everyone. Also acknowledge the contribution from the chairman and non-executive directors, and I look forward to hopefully seeing them face to face in December, which will be the first time in over 6 months. So I wish all our shareholders well for the coming months. We thank you for your continued support and the trust that you have placed in us, and I hope we can meet with you in person sometime in 2022. Thank you. I'll hand back to the chairman.
Thank you, Jason. I'll shortly address any shareholder questions on the financial reports and any general matters, bearing in mind that we'll separately consider the remuneration report and other items of AGM business later in the meeting. Mr. Julian McCarthy, the signing audit partner from the company's external auditor, PricewaterhouseCoopers, is present and available to answer any questions relevant to the conduct of the audit and the preparation and content of the auditor's report for the year ended 30 June 2021. And so the questions. Joe, are there any questions about the company or its financial report at this time?
Yes. The first question we have received is from Ms. Margot Murphy. Please specify the measures Argo is taking to implement a zero emissions policy and waste minimisation policy in both its operation and its investments.
Well, thank you very much, Margot. As you've just heard, our Managing Director, Jason Beto, outlined our approach to ESG issues in our investment portfolio. But just to recap, it's a really important part of the assessment that we make of companies and their long-term prospects. We don't have any upfront filter concerning these issues, but rather it's an integral part of the assessment process for each potential investment. With regard to Argo's own emissions, we're a very small company with just 14 staff in 2 very small offices. And in those workplaces, we do all that we can, like minimising printing, recycling and so forth. And of course, with the advent of the pandemic, everybody has been holding virtual meetings, and so our travel over the last couple of years has also reduced considerably. Thank you. Joe, are there any further questions?
Yes, this question is received from the RMRAG family, Pty Limited. How is it we still own the notorious penny dreadful that is McGrath Limited? This company is still languishing at the height of Australia's greatest housing bubble. This is as good as it's ever going to get for McGrath. Please stop wasting your time and our money. Can the board please outline a plan to exit this stock?
Well, thank you very much. As this question concerns an individual stock in the portfolio, I'm going to ask the portfolio manager our managing director to answer this question. Jason.
Thanks, Russell. Thanks for the question. Yeah, look, McGrath clearly has not been one of the best investments we've made. But like every company in the portfolio, we're constantly looking at what the valuation is, what we think it's worth, I guess, not the market. We could easily sell McGrath. It is liquid enough, and we could have sold it at less than 20 cents a share. It's now back to 60 cents a share, net cash, paying dividends, with two new substantial shareholders joining the register. So we think this is a cyclical business, and it's likely that we will try to exit or reduce our holding through the cycle. But we think at this current price, there's better value for shareholders to hang on a bit longer.
Thanks, Jason. Joe, any further questions?
Yes, this question is received from Mr. Michael Hopkins. Can the board assure shareholders that it will not invest in companies involved in fossil fuel exploitation or projects which contribute negatively towards climate change?
Well, thank you very much, Michael, for that question. A similar theme to one previously. Just to repeat that we do have an ESG investment statement on our website, which outlines our approach to these issues. Our investment process takes a very strong view of these issues, but we don't have any negative screens at the start of our investment process. We believe also that companies with poor corporate governance policies and practices are less likely to achieve strong long-term financial performance. So this is a really important issue for us. Thank you. Joe, any further questions?
Yes, this is a statement received from Mr. Paul and Mrs. Marie McCaffrey. Mr. Beddoe, please be advised that my wife and I, her husband of some 54 years standing, are relatively long-term investors in Argo. We do not believe that the Argo board should allow its investment policies in companies producing and trading in Australian natural resources, especially coal, oil and gas, to be determined by activist, mainly small shareholders who propagate climate change policies supported by so-called scientific modelling, which have a record of exaggerated, inaccurate predictions. We believe our board should make it clear to all shareholders that the investment decisions will continue to be based upon the best interests of all shareholders and our country's economic welfare, not the distorted vision of the self-interest of small groups of activist, leftist, politically charged shareholders.
Well, thank you for that. I think there's more than a comment than a question, but it's on the same topic again. I think it's probably worthwhile to just point out at this point that there's obviously going to be a range of views amongst our 95,000 shareholders on this topic. And for that reason, I think it's very important that we as a company are transparent about our approach to these issues, as we are, and there's a statement on our website, and the Managing Director has addressed it in his address just recently, for us to be transparent and shareholders to make up their own mind whether Argo is a suitable investment for them. Joe, any further questions?
Yes, we have received another question from the RMRAG family, Pty Limited. Argo owns 10% of the shares of Australian United Investment Company. Their shares trade at a discount to NTA yield of 3.7%, have an ageing board and considerable unlocked value. Will Argo make a strategic move to merge with AUI before Washington H. Soul Pattinson do?
Well, thank you for that question. It's true, we've got a shareholding of just under 11% in AUI. I suspect this question has been somewhat triggered by the recent merger of Washington H. Soul and Milton, or takeover, but we should bear in mind there's a very close relationship and cross-shareholding between those companies. And of course, at AUI, there's significant holdings in that company by the Potter family and their associated interests. Many years ago, Argo, along with a number of other listed investment companies, had the practice of buying shares in other listed investment companies when they were trading at a large discount to their net tangible asset backing. This was seen as a way of buying quality shares at a discount to the market price. During that process, Argo's holding in AUI reached a peak of 19% of AUI. Several years back, the board reviewed this approach and decided on a change. We now no longer see it as an ideal thing for us to be holding shares in other listed investment companies. Rather, we'd like our own analysts and investment portfolio manager to be managing our money. So we've been selling down the holdings, and as I said, for AUI, it's sold down from 19% to under 11% now, and that's the approach we're currently taking. And we do not have any strategic view about a merger between Argo and AUI. Any further questions, Joe?
Yes, we have a question from Dr. Lindsay Campbell. Mr. Higgins, this question relates to either composition of the board or senior management of Argo. Will the board consider appointment to the board or senior management of a highly qualified person whose background is in science and/or engineering? People with highly developed skills in science and/or engineering bring a different skill set to dealing with companies. In particular, such a person will bring different expertise in analysis of companies, including direction of a company, financial allocation of resources, and the ever-increasing ESG perspectives. Therefore, I urge the board to consider such an additional appointment.
Well, thank you, Dr. Campbell, for that question. I agree with you that it's important that the board has a mix of skills, a range of skills, and indeed we use a skills matrix to assess the range of skills possessed by each of the board members. And when recruiting new members, we look to see whether there are areas that need strengthening. And that way we continue to have a good balance of skills across the board. And that includes, of course, other issues like diversity and so forth. Yeah, with respect to the specific question with regard to science and engineering, I'm pleased to note that we think we have this covered on our current board. Our Managing Director, Jason Beddoe, has an engineering degree and in fact worked as a mining engineer before he joined the funds management industry. In my own case, I used to be the Chief Executive of the Federal Department of Industry, Science and Resources, a board member of CSIRO, and for many years chaired the advisory committee guiding CSIRO's work in new energy technology. I've also played many other roles in the science world, including convening the Prime Minister's Science, Engineering and Innovation Council that brought together leading scientists from the private sector, from academia and from government to spend a day with the Prime Minister to brief the Prime Minister directly on current issues from a science and engineering perspective. So I well appreciate the point you're making, but I think we've got this issue covered on our current board. Thank you. Joe, are there any further questions?
Yes, we have received a question from Mrs. Beryl Croft. In Argo's ESG statement, mention is made of carbon and greenhouse gas emissions, including measurement and reporting when assessing a company. With that in mind, 1, does Argo have a commitment to achieving net zero emissions in its portfolio by 2050 with realistic targets on the way? 2, which companies are considered by Argo as needing attention to achieving net zero by 2050? And thirdly, does Argo intend to divest itself of these companies if they do not develop net zero strategies for 2050 and realistic interim targets on the way?
Thank you for that question. I think I'm going to ask Jason to answer this one. He did mention the extensive interaction that we have with companies over these issues in his address. But Jason, perhaps you'd like to answer this question, please.
Sure, Russell. Thank you for your question. It is very topical. I guess we believe that corporates will be part of the solution in the world or a country reaching these 2050 targets. But yeah, there is a lot of water under the bridge between 2021 and 2050. Rio Tinto announced last week it will spend up to $10 billion over the next 8 years reducing carbon emissions back to a 2030 target. And there'll be many other developments. In addition, a lot of new technologies to get there. So we believe if the world becomes on target to reach that target, that most corporates will also be playing their role. So we do think that the portfolio is most likely, if that's where the world ends up, to be in a carbon neutral or even better position. Clearly the biggest energy producers and the biggest energy consumers are, the companies that probably have to do most of the work, reinvesting and changing what they do. Equally though, another thing that will have to take place for this to be possible is a global carbon price. And we don't have that yet. So companies that aren't able to invest themselves can purchase carbon credits from those that can, because we're talking about a carbon neutral world here at 2050, not zero carbon. Along the way, if companies can't meet these requirements or look to and not be attempting them, we would argue that some of them will probably be removed from the portfolio. That might happen by itself. These companies might need to be privatised. Governments might need to stand in an interim path. So we're watching all of those issues. But at this stage, I think that governments and corporates are all going to have to work together to get there. And if you want to stay in the listed environment and have shareholder capital support you, you're going to have to be on board.
Thanks, Jason. Joe, are there any further questions, please?
Yes, this is a statement that we have been asked to read from the Australian Shareholders Association. My name is James Hahn and I represent 4.9 million proxy shares on behalf of the Australian Shareholders Association. Thank you for meeting with us and discussing issues of interest to us. It is pleasing to note that Argo has outperformed the S&P ASX 200 accumulation index this financial year, and we hope this is a trend that may continue. We will vote for the re-election of directors and against the Remuneration and Constitution Amendment. I will comment as the resolutions are presented.
Thank you. Thank you for that, Jo. Are there any further questions?
Yes, we have received a question from Mr. Ben Clatworthy. With the speculation of interest rate rises and a potential recession, will this have a detrimental effect on Flight Centre with the gradual return to profit and approximately 400 million in unsecured notes and currently losing about $40 million a month?
Thank you. As this concerns a specific stock, I'm going to pass to Jason.
Thanks, Russell. Oh, look, I think at the beginning of your question, are we going to have a recession? That's an issue many economists are debating at the moment, and I think we think it's a little bit further out. On Flight Centre specifically, I'm sorry, I'm not a huge amount of help. We don't own Flight Centre. We haven't, apart from Sydney Airport, we've stayed away from all of the travel stocks through the COVID experience. As the share prices have recovered, we think a lot quicker than the earnings will, and most of these companies raised a lot of money. So with the specifics of Flight Centre, I can't really help you on the loss making, even though I do think there'll be a little bit of pent up demand short term as the economy's unlock and people have some flexibility on travel.
Thanks. Thank you, Jason. Jo, any further questions, please?
No, Chair, there are no further questions, either written or audio, for this item of business.
Well, thank you very, very much. I'll now move to the next item of business. The next item of business, item 2 on our agenda, concerns the adoption of the Remuneration Report. The Corporations Act requires that all listed companies submit a remuneration report to their shareholders for consideration and adoption by way of a non-binding resolution. Argo's remuneration report is set out in pages 17 to 37 of the annual report and outlines the company's remuneration policy and its relationship with company performance. Our overall objective for the company's remuneration structure is to ensure that it's linked to value creation for shareholders. This is achieved by awarding the Managing Director and specified objectives with a combination of fixed remuneration, short-term incentive or STI, and long-term incentive or LTI opportunities. Alignment of the long-term interests of shareholders and executives is achieved by a significant component of executive pay being performance-based or at risk and measured over an extended period, and also by awarding some of the executive remuneration in the form of Argo shares rather than cash. Performance is measured relative to Argo's listed investment company peer group and to the S&P ASX 200 share market index. Our remuneration policies remain unchanged from the prior year. The board considers that the company's remuneration structure, which is explained in detail in the remuneration report, is fair, competitive, aligns with Argo's corporate objectives and the interests of shareholders, and genuinely rewards sustained good performance achieved without taking undue risks. I now move the motion that the remuneration report for the year ended 30 June 2021 be adopted. For your information, details of the proxy votes received on this resolution appear on the screen. Please note that this resolution is advisory only, as does not bind the directors of the company. However, should 25% or more of our shareholders vote against the remuneration report for 2 years in a row, then shareholders at the second AGM will be asked to vote on whether all directors should stand for re-election. Time for questions. Joe, are there any shareholder questions regarding the remuneration report?
Yes, we have received a question from Ms. Margot Murphy. Please justify why a shareholder's vote regarding the remuneration report can be non-binding.
Well, thank you, Ms. Murphy. The fact that it's non-binding is in fact the law, and under the Corporations Act, that is specified. However, in order to heighten the engagement between shareholders and boards on remuneration, the so-called two strikes test was introduced into the Corporations Act in 2011. As I explained in the lead into this item, if a company receives a no vote from 25% or greater, the number of shares voted on 2 consecutive annual general meetings, then shareholders can vote at the second meeting to determine whether all the directors need to stand for re-election. So while under the law it is non-binding, the consequence of no votes are real and meaningful. Joe, are there any further questions?
Yes, this question is from the Australian Shareholders Association. James Hahn from the Australian Shareholders Association. We will be voting against the adoption of the remuneration report. We believe that the lowering of the maximum hurdle for long-term incentives from 3% to 1% amounts to a pay rise for executives at a time when the company has underperformed the S&P ASX 200 accumulation index over the 5, 10 and 15-year periods. Could you please inform the meeting how this is beneficial to Argo shareholders?
Well, just say first of all, thank you, Mr. Hart. Regarding the change to the total portfolio return, a tranche of the LTI, and there are two, one relates to earnings per share and the other relates to total portfolio return. We have changed the parameters concerning that test. These were outlined and discussed at last year's AGM, and indeed were voted on last year's AGM and approved by shareholders. I can repeat the comments that I made last year, and that's that the performance hurdle was not changed, as you have suggested, and that nothing will vest unless the Argo portfolio at least matches the ASX performance test. And you will recall in my address, I reminded everybody that the index makes no allowance for costs or taxes, whereas Argo's does indeed need to cover the costs and taxes paid by the company. The amendment that we made last year, just to remind shareholders, was that 40% of the maximum would vest if the index was matched. And then there is a straight line outperformance test, which goes to 1% outperformance, and previously that had gone to 3% outperformance, and that's what Mr. Hahn is referring to. We made that change because under experience we felt that trying to incentivise our analysts and portfolio manager to achieve 3% outperformance would lead to undue risk given the nature of our company, and 1% outperformance would be a sterling effort in itself. The new structure was introduced last year, and there are 4 years before it gets tested, so no payments will be made under these new parameters until at least 2024. Joe, are there any further questions?
No, Chair, there are no further questions, either written or audio, for this item of business.
Okay, thank you. Please submit your vote for this item of business if you've not already done so. I'll now move to the next item of business. Item 3 on the agenda concerns the re-election of a director. Joycelyn Morton retires by rotation in accordance with the company's constitution, and being eligible, offers herself for re-election today. Details of Joycelyn's qualifications and experience are included in the notice of meeting. The other directors unanimously recommend that shareholders vote in favour of Joycelyn's re-election, as they consider she is well qualified to be a director of the company. I now invite Joycelyn to briefly address the meeting. Joycelyn.
Thank you, Russell. I joined the Argo board in March 2012, and I can confirm to shareholders that this is a company with strong corporate governance, business ethics, and a clear focus on the investment business to ensure value adding for all shareholders. With the concerning reviews of many corporations over the last few years, I believe Argo's adherence to these standards is very important. It's a pleasure and an honour to be a director of this proud South Australian company, Argo Investments. And as many of you will have noted, being a director of Argo, ALI, ASC and Beach Energy, I would normally be a regular visitor to the beautiful city of Adelaide. However, these are far from normal times, and unfortunately, we're appearing before you via video rather than in person. All directors should assess the value and skills they bring to a board. The notice of meeting summarises my 41 years of experience, background and credentials, firstly as a senior executive of Woolworths Limited, Shell Australia and Shell International in business, finance and taxation. For the last 14 years, I've served as a non-executive director of various companies. And of particular note, since I last stood for re-election, is that I have retired from Snowy Hydro Limited after 9 years and have joined a young software company located in Brisbane, Felix Holdings Group Limited. In addition to this business experience, I also have extensive community service as a volunteer in a volunteer capacity to the accounting profession, both domestic and international. Although a chartered accountant by qualification, I served for over 30 years in different governance capacities for CPA Australia, including being the first female president of their New South Wales division and ultimately national president in 2000. I've also served on many industry and government committees, councils, not-for-profits, being the first female president of the Australian Council of Professions and currently the chair for the Greater Sydney Region Red Shield Door Knock Appeal for the Salvation Army. This is a time of structural change in the business community. So it's important that your directors have a broad range of experiences to assist the company. I apply these 41 years of business and professional experiences covering public accountancy practice, financial services, major infrastructure, companies in retail, oil, gas, shipbuilding, and hydroelectricity, both international and domestic, including 14 years of ASX-listed non-executive directorships and chair experience for the benefit of our company and shareholders. I thank my fellow board members for supporting my re-election, and I thank all shareholders for your support as well. Thank you very much.
Well, thank you, Joycelyn. I now move the motion that Joycelyn Morton be re-elected as a director of the company. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Joe, are there any shareholder questions regarding Joycelyn's re-election?
No, Chair, we have received no questions, either written or audio, for this item of business.
Thank you, Joe. Shareholders, please submit your vote for this item of business if you've not already done so. We will now move to the next item of business. Item 4 on the agenda concerns the re-election of a director. Elizabeth Lewin retires by rotation in accordance with the company's constitution and, being eligible, offers herself for re-election today. The details of Liz's qualifications and experience are included in the notice of meeting. The other directors unanimously recommend that shareholders vote in favour of Liz's re-election, as they consider she is well qualified to be a director of the company. I now invite Liz to briefly address the meeting. Liz.
Thank you, Chairman, and good morning, ladies and gentlemen. It is my pleasure to be before you today, as being elected by shareholders 3 years ago to be a non-executive director of the board of Argo has been a role that I have been honoured to fulfil for the last 3 years. Therefore, I am standing for re-election this year, and I seek your support to continue the commitment of representing your interests at Argo for the next 3 years. For more than 30 years, of which 17 years were in Europe, my professional career and experience has extended across several financial disciplines, including equity markets, wealth management, investment banking, and superannuation. Following many years leading businesses in UBS Investment Bank in Europe, I held the positions of CEO of UBS Wealth Management UK and CEO of UBS Wealth Management Australia, both significant businesses involved in investment management. As a CEO of several businesses within a complex global bank, it also necessitated the skills of governance, risk management, talent development, and teamwork, skills that I believe are relevant to contributing to the future success of Argo. My non-executive career has involved governance roles in superannuation and chairing investment committees. My directorships extend across several not-for-profits, including the Australian Chamber Orchestra, St Vincent's Clinic Foundation, and other bodies in the arts, education, and health sectors. In addition to having a passion and commitment to furthering the best interests of Argo, I believe I have relevant skills and experience, including a deep understanding of investment markets and risk management, a perspective informed from working for many years internationally and in Australia, a fulsome knowledge of the Australian superannuation and wealth management industry and the multidimensional factors that are important to our shareholders, and experience and a desire to work with teams to achieve the best possible outcomes for our shareholders. If elected, I look forward to working with my board colleagues and Argo executives to serve you, our shareholders, to deliver our mission of maximising long-term returns through a balance of capital and dividend growth. It would be a privilege to represent you, and I seek your support for my re-election to the board of directors today. Thank you.
Thank you very much, Liz. I now move the motion that Elizabeth Lewin be re-elected as a director of the company. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Time for questions. Joe, are there any shareholder questions regarding Liz's re-election?
No, Chair, we've received no questions, either written or audio, for this item of business.
Thank you, Joe. Shareholders, please submit your vote for this item of business if you've not already done so. We will now move to the next item of business. Item 5 on the agenda concerns amendments to the company's constitution. The company's current constitution was adopted by shareholders at the 2020 AGM and is available to shareholders on the company's website. The company seeks shareholder approval to make 2 amendments to its constitution to ensure it complies with the current regulatory landscape. The special resolution to be adopted is, and I quote, that for the purposes of section 136(2) of the Corporations Act and for all other purposes, the constitution of the company be amended in the manner set out in the explanatory notes to the notice of meeting. The first proposed amendment is to clause 8 of the constitution and will entitle the company to record the names of 4 joint holders of a security in respect of a CHESS holding instead of the current 3. This amendment will provide consistency between the constitution and the functionality of the ASX's new CHESS system, which is scheduled to go live in April 2023. The second proposed amendment relates to clauses 33 and 34 of the Constitution and will clarify that a general meeting may be held by the company in one of 3 ways: at a physical venue, at one or more physical venues, also using technology commonly referred to as a hybrid meeting, or 3, using virtual meeting technology only, where all members participate using online facilities, also known as a virtual meeting. It is our intention to hold physical general meetings whenever it's safe and compliant with government regulations to do so. However, these amendments will ensure that the company has flexibility to conduct virtual meetings in the future if needed. The proposed amendments are administrative in nature and have been reviewed by the ASX. The board unanimously recommends that shareholders vote in favour of these amendments to the Constitution. I now move the motion that the company's constitution be amended in the manner set out in the explanatory notes to the notice of meeting, with effect from the close of the meeting. For your information, details of the proxy votes received on this resolution appear on the screen. This is a special resolution as such, a majority of 75% in favour is required to pass this resolution. Joe, are there any shareholder questions regarding the amendments to the Constitution?
Yes, we have received a question from the Australian Shareholders Association, and we have also received a similar statement from Rathbone Investment Management in the UK. James Hahn from the Australian Shareholders Association. We will vote against this motion. Although the amendments are in accordance with CHESS regulations, the proposed changes provide the board with discretion to conduct meetings using virtual technology only, and we believe that the technology has not advanced enough for virtual technology meetings to replicate the exchange between shareholders and the board, which is achieved in a physical meeting. We see virtual meetings using current technology as fit for use only when physical meetings are precluded. Is Argo intending to conduct virtual meetings in the future? And if so, what would be the circumstances that would motivate you to do so?
Thank you, Joe. Is the other question the same? Perhaps it might be best to do them together.
Yes, no, the other question was just a statement that we received that is on the same theme, but there is no question. So I think if we just address the Australian Shareholders Association question, that will address both.
Right. Okay. Well, thank you very much. I think first thing for us to say, it's our intention to return to holding physical meetings in Adelaide when it's safe and compliant to do so. We regard that as being a much better option, and indeed the ability to travel around the country and meet with shareholders in other locations is something that we've traditionally done and been prevented to do so by the COVID restrictions, and something that we're looking forward to resuming. The proposed amendments to the Constitution do permit the company to hold virtual meetings, as we have in the last 2 years. In the last 2 years, it's been quite difficult organising our meetings, because in order to be able to meet virtually, we've had to await some specific approvals from the government in relation to the Corporations Act and from ASIC for them to say they're going to have a forget what this is called, no implementation of, no action, thank you, Tim, no action positions in regarding some of their regulations. And that's been very difficult for us to sit and wait and see whether this would be possible. The government's recognised that, and last week introduced a bill into the federal parliament, which includes permanent amendments to the Corporations Act to allow companies to hold virtual meetings, provided their constitution specifically permits it. And so we believe this is an important amendment to be compatible with that legislation, for us to be able to hold virtual meetings in the future, should conditions require it. Let's hope that it does seem like the COVID-19 pandemic is reaching a new stage, and it's my current expectation we'll certainly be able to meet in person next year. But I probably said the same last year, actually. So this amendment to our Constitution is compatible with the legislation that has been introduced into the Parliament, and would provide us the ability to hold virtual meetings should they be required by restrictions and so forth in the future. But I'll repeat, it is our intention to return to hold physical meetings as soon as it's safe and compliant to do so. Joe, any further questions?
No, Chair, there are no further questions, either written or audio, for this item of business.
Thank you very much. Shareholders, please submit your vote for this item of business if you've not already done so. Well, that concludes the items of business on the agenda for today's meeting. I'll very soon close the polls, so if you've not already done so, please submit your votes via the Lumi platform now. We will announce results of the polls to the ASX later today. Can I also take this opportunity to remind you that the 6th Annual General Meeting of Argo Global Listed Infrastructure, which is also managed by Argo personnel, will be held virtually at 12:30 p.m. Adelaide time, or that's 1 p.m. Sydney time, today. Argo shareholders and other visitors are invited to watch the webcast live with a guest access. I now declare the polls closed. I thank you all for your virtual attendance today and look forward to your attendance next year. And I now declare the 75th Annual General Meeting of Argo Investments Limited closed. Thank you.